Peter Rose, Longwood Currency Trading. Good morning. It's the middle of July 2021 and it's chilly. It was 97 degrees yesterday in the heat. But today it's chilly. And I was going to, I came out to check the flower gardens and stuff, and I was going to do my video out here, but I think I'll have to wait and just go inside because it's going to rain any minute. And then I'll tell you what the title of the video is going to be. Yeah, but first, before we do that, I got to get a coffee. And so this just ended, so we're in good shape. Cream first, then the title of the video. Wait for it. The title of the video, in case you're wondering, is why one massive bad trade could be a good thing. Let's go in the library. We'll chat about it. And there's Bo. Bo may join us in the library for our discussion. Actually, he's coming in. And the reason he's coming in, as you all may know, is because Sue isn't here and he's looking for Sue. Sue is out shopping. And so it's me and the Bo Dog to talk to you guys about why one massive bad trade could be a good thing. Right? So, a coffee. Why would one massive bad trade be a good thing? Well, to Jesse Livermore's quote that the only way I know how to get a good education in the market is to invest cash, track my trades, and learn from my mistakes. And he goes on to say that the more that he loses money, the more he learns what not to do, and the more he learns what not to do, the more he learns what to do. We've all heard that you don't learn anything from a win. You only learn from your losses so that you know what to work on in order to get better. Unfortunately, in trading, the death of your account is like 1,000 cuts if you're not careful and you don't understand the psychology that you have, that everybody has. Look, 90% of the traders lose 90% of their money in 90 days. And I think that's probably because of the bad education. Certainly there aren't that many stupid people in the world. It's not a matter of intelligence. It's a matter of practicality and where you're getting your information on the trading. And one of the things that I think most folks suffer from is a fear of loss, right? I mean, as human beings, we have more of a fear of loss than we have of a desire for gain. That's something that my karate master, S.A. Brock, taught me back in, I don't know, 69 or something like that, 1969. Yeah, 1969. It's strange that that you guys can go into a poker game and the incremental losses, you know, don't bother you. They're all part of the game. But once you get into trading, all of a sudden, it's important not to lose. And each loss is like a little stab. It's like a little cut. But you can't look at it the same way that you look at it in poker. You know, in poker, the hands are being dealt very, very quickly. And so it's easier to throw your hand away and take that loss because you know the cards are going to come out again. Same thing with throwing craps. The dice are thrown 60 times an hour, so you know you got plenty of opportunity to trade. You know, even if you're down on the 5-minute chart or the 1-minute chart, even if you're scalping, you might do 40 or 50 trades a day. I don't think you'd probably do more than that unless you were really, really, really talented. So you tend to have the law of large numbers start to take effect very quickly, because those losses they mount up, and you're mentally working on a process of evaluating the field of battle and making adjustments. You know, I'm sitting at the poker table, and every time Bob goes like this, he's got the nuts, and so I'm not going to bet against him. I'm not going to throw all in when Bob does that. So in currency trading, it's not that way. You're not going to learn, unfortunately, from a series of small losses. You're just not. And I think that's one of the misnomers of trading. And even I say that I feel that you're going to be, if the only thing that you did was set a short stop, in my particular case, because I'm on a 5-minute chart, I'm a day trader, I'm trading on a 5-minute time frame chart, that gives me 12 trade opportunities an hour. Not that I take them, but it gives me, I'm not afraid that I'm not going to find a trade. But basically on the 5-minute chart, currently with a 5-period ATR, my short stop is 8 pips. Well, that's an ATR and a half, but it's still only 8 pips. It's only 8 pips. And so my premise is I'm going to take a lot of those small losses, because I know eventually with a good win-to-loss ratio, not only will the number of winning trades that I make exceed my losing trades, but the dollar value of those wins will be greatly more than what I've lost, if not over the cumulative effect of the trades, but in the management of individual trade basis. So that comes with experience. Notice I said win-to-loss ratio. And I think if you're trading, even if you've got some trading background behind you, you're still going to need, once you figure out your rules, once you figure out how to process it. You know, in the last few videos I've been talking about process-oriented trading. I don't know very many traders. I don't know any traders. I know a couple that may think about using that type of methodology or that type of approach to their trading. I think about it as a natural consequence out of a 33-year career as a senior software engineer, because it's all process-oriented stuff. I've got a bachelor's degree in physics. That's all process-oriented. 40 years in real estate investment. That's process-oriented. I bring that to the currency table and utilize that. I didn't in the beginning, because the processes and all those other disciplines, I didn't understand it at the time, but there's a time differential. There's a heartbeat that's unique to each one, and I didn't understand that when I got into currency trading, because I didn't have a mentor to talk to me about stuff like this. And I think that's probably why a lot of folks don't care for my videos. And I don't have a whole lot of subscribers at this particular time, and I don't get very many comments and stuff. Well, that's fine. I'm retired. I'm not trying to run a trading business or anything. But I think because I'm talking about the straight scoop, and I'm talking about stuff that will, it's hard work to change the way that you think, yeah? And so you'd rather have some asshole tell you that his secret sauce recipe with a bat pattern or moving average crossovers or some crap like that is going to be the secret to your success. And so you'd rather watch an entertainment video and lose your money than try to figure out what the process is. Not you individually, but I mean, look at the folks around you. Look at the 90% that are throwing their money down the toilet. But the long and the short of it is, I can talk about taking that short stop because I have that win-to-loss ratio, confidence in myself, over more than just the 300 trades that I suggest that someone use to get a good grip on what their win-to-loss ratio is. You know, I'll do 600, 700, 800 trades a year, and so I long ago was able to figure out what my win-to-loss ratio is. And so I have confidence that taking those small losses is going to work. The problem with that is every now and then I'll get caught with a massive loss. I'm talking 30 or 40%. And that becomes a factor of my real estate background more than anything. It's so difficult for me to make those transitions. And so if I know, don't trade when you're tired, you're thinking other things, but you just trade all the time, or it's in your head all the time. So those things are kind of masked. And then I find myself, oh, I'll make this a long-term trade, and then it just goes to shit. That's a recognition loss. I'm not learning anything from that other than I still have work to do on that emotional connection with me and when I should be trading, and just not to go for that long trade. I don't take a trade unless there's 20 or 30 pips to offer. Not that I'm thinking that I'm going to get 20 or 30 pips as a day trader. I'm tickled to death if I get 5 pips 1,000. $5 1,000, 0.5% 1,000, because you can make a living at 5 pips if you have a big enough account. And see, the thing is, I do have a big enough account where 5 pip a day, or if I could do 5 pips a day, three or 4 days a week, I'd be fine. I'd be making more than I was making as a software engineer. So I'm not particularly concerned about that. I know it's very difficult for you as beginners to play with a mini account and be just fucking tickled to death when you get $5 a day. That's 5 pips. How tough is it to make 5 pips? Well, that's the point. It's not very tough, and you're thinking that currency trading is tough, and so you're going to go on and you're going to trade for more than the 5. You're going to try for the 20, and you're not going to be successful, maybe, but one time out of the 10, and of the 10 times that you lose, you're losing 10, 20 pips. You're all upside down. So whether when you're starting or whether you're experienced, taking that small loss is the way to go. Even when you're inexperienced, you're taking those small losses far more times than you're winning, and your winnings are far less than what your gains are. But that's what will help you build the skill necessary in order to be consistent in your trading, and then you'll see that the win-loss ratio will begin to change, or at least it will stabilize, so that you can develop what I call your expectation of success, value on a per trade basis. It's at that point that you can take $100,000 and drop it in there, and then you're making some significant money. Look, 5 pips on $100,000 is $500. So you're making $500 a day, 3 or 4 days a week. You've replaced your day job. Of course, the premise is that you've got $100,000 to trade from. Well, look, if you're buying a Range Rover or you're renting a Lexus, look, if you're renting a Lexus for $500, the average car rental price in America, I just looked it up the other day, is $480 a month for a lease. So if you're leasing a Lexus or a Range Rover or something like that, you're somewhere in the $500, $600, $700 a month range, so that you can be looking too good driving down the road. Look, $600 a month, that's $6,000 anyway a year, $7,000 bucks a year, $7,000 a year. Jesus, buy a fucking beater, will you? And save $6,000 or $7,000. That's almost enough to trade a full lot, for God's sakes. And so if you save your money and you do smart things, like they say in the Automatic Millionaire book, you can build a substantial asset base, cash base, to trade with. But you don't want to start trading with a $20,000 account until you have a good win-to-loss ratio, until you have a grip over your emotions and you understand the trading process. So, as an established trader, look at yourself the way that you would like to become. You want to be a disciplined trader, happy with 8 pips a day, 10 pips, whatever you think your minimum thing is that you're going to need. Let's say you say, oh, I'm never going to have $100,000. Well, never is a poor term, but in the foreseeable future, $100,000 is just not attainable to make $500 when you trade on that daily basis, or averaged out 2 days a week, making $1,000 a week. The other days are losers, and some days you're going to make $1,000. And all I'm saying is that you average out for the week $1,000. And so, look, that's $4,000 a month, right? That's $50,000 a year. That replaces your income for most folks. At $100,000. Well, I can't come up with $100,000. Well, what are you going to do? Throw up your hands and trade like a dumbass? You can come up with $20,000 or $30,000. It's not going to be tomorrow, but it may take you several years. How long does it take to graduate from college? 4 years. How much does it cost you to go to college? At least, in this day and age, $50,000 for the 4 years. I know a lot of folks that are paying $40,000 a year for college. I don't know what it's going to be like when you're listening to this video 10 years from now or whatever, but how much does it cost to go to college? So if you think that you're trading, that you have the personality and the confidence in yourself as a person to be disciplined, that your trading will be successful and that you could support yourself someday on that, that's the same view that you have when you go into college or trade school. Well, I'm going to spend, like if you go into automotive repair school like my son did, it's $15,000 for a couple of years of trading. It's a associate's degree in automotive engineering. That's what he got. So it's $15,000. Takes you 2 years to get through that, and yet you can easily make $40,000 to $60,000 a year. And the master mechanics are making over 100. So the good ones. So that investment in not only money but in time in your education will pay off for the rest of your life. And so you look at the trading the same way. Yeah, you can't come up with $100,000 or maybe even $20,000 tomorrow, but you wouldn't want to. You're still learning this stuff. So you start with a mini account until you can do whatever it is that you think you need to do. In your mind, you say, "Oh, I'm gonna have $100,000 somehow. I'm gonna get $100,000 in my trading account, so that I can make on average $1,000 a week." Now, that's not out of the unmanageable, okay, on a $100,000 account. It's $50,000. Well, take your little mini account and try to make $10 a week, because the equivalency is the same, right? So if you can make $10 a week and not get greedy and say, "Oh, I'm going to go for $20. I'm going to double it up this week." No. If it's safe, you can do that, but just go and be disciplined in what you're trying to do. Now, here's what's going to happen when you're using that little mini account. If you're disciplined, this only works if you're disciplined. You're going to be constantly taking that small loss. You're not going to extend the loss to give price room to breathe. You're not going to do that. You're going to keep taking that loss, because each loss, you're going to have to sit down, looking at the chart, looking at the situation. Why did you take that trade? Why didn't it work? And eventually you're going to figure that out. Now, you may have to lose 100 times, There'll be some wins in there too, but you may end up losing 100 times. Let's say that's all you did was lose 100 times. You lose $8 100 times. That's $800. Your mini account is $1,000. So you just lost 80% of your account. Well, re-fucking-load it. It's $1,000. It's part of your education. If you can't figure things out after losing $800 on a mini account, forget it. Go to trade school and learn how to weld or something, or be an archaeologist or astronaut. But don't do trading if you're going to lose $800 trading minis. Learn the skill. And look, if you lose the $800 trading the mini lot, it means that what I'm talking about, the education that's out there, doesn't work, or particularly doesn't work for you. Well, find somebody that's successful and have them help you. It's easy, right? Okay. So what you're going to end up doing, if you're disciplined, taking those small losses and gradually building up to get your get to the point where your win-loss ratio is sufficient. Those little losses of $8 a time and the gains, because you're trading pips, you're not trading dollars. I've had a lot of videos where I've talked about that. So eventually you get to the point where you're going to trade this $20,000 account. And again, you're looking for five pips. It's you know, it's $100 a day, right? When you trade. $20,000 account is a big account. So now the dollar values start to grab at you, where in the mini account they did, because it was only $8. $10 win. I mean, it's not even a pizza. That's why you got to trade for pips, because when you start trading where the loss is $160 on that short 8-pip stop, that hurts. And so you still have to look at it as an 8-pip loss, because if you don't, it'll change the way that you think about your process. You'll start to doubt yourself. You have to keep the same process going. But here's what happens, and this is the danger that I mentioned to anybody who trades with me, is that eventually when you're trading that large account, you can't help but have your emotions come into play. Nobody on YouTube wants to listen to discussions about this, and so I don't talk about it very much. And quite frankly, it's really the secret sauce. So if you want to learn that from me, you have to pay for that. You know, but I hint at it all along. But here's what's going to happen if you don't understand fully the impact of your psychological background to the trading is that somewhere along the line you'll do what I do, which is you'll take a big hit. You won't honor the short stop, and it'll be a big hit, and you'll go, oh shit, but you'll do it again. Maybe not right away, but for me it's about every 3 months I get the feeling, oh, I got this, and then away it goes. And those big hits aren't going to teach you anything. They really aren't. They're just this, like somebody kicked you in the ass, and you okay, don't do that. What you need is to lose your account. What you need is a massive loss. And that's going to do one of two things. Either you're not going to be able to come up with the money to ever trade again, or you're going to learn what the fuck not to do. Absolutely, positively learn what not to do. That's where the massive loss comes in. That's why it's good to have a massive loss one time early in your trading, when you're trading with $20,000 or less in your account, somewhere between $10,000 and $30,000, somewhere in there, you need to have a massive loss. Because the other losses, even though they might be relatively big. 5 hour loss, something like that. That's a big loss, but it's not massive. Yeah, you need to take that account to the wood, because then you're going to sit back and you're going to go, wait a minute. It took me 2 years to save that money, and I just wiped it in 1 or 2 or 3 trades. I mean, a massive loss isn't just one trade; it's a series of them. And you know, statistically, you're going to have 6 losses in a row. You're going to have 6 winners in a row too. You don't really remember the where all that happens or how it all works in together. But for me, if I'm trading a full account, $10,000, full lot, and I'm taking that 8 pip stop, that's $80. So that's a $500. That's a $500. I'll lose $500 on that account, which is 5% of my 5% of my $10,000 bank, right? That's not a massive loss. That's a big loss splattered over 6 trades. But if you make some serious mistakes and you take 30% or 40% of your account within 3 trades, let's say, if you drop 40% of your account in 3 trades, that's a massive loss. It isn't just one trade, but it could be over 3 trades. Because now you're doing something really, really wrong. You've lost $4,000 of that 10, whereas a series of big losses would have been 500. So that's going to get your attention. If you're not really geared for trading, or you got lucky up to that point, maybe that massive loss won't affect you. Maybe you'll just get pissed off and reload the account and charge on ahead without thinking about it. You really do need to think about it, because the massive loss is a good thing, because it stops you and it makes you think. It makes you consider what you're doing, how you're doing it, and when you're doing it. Those 3 critical questions that we as traders have to keep our attention on all the time. And that's why a massive loss can be a good thing. It can also be a very bad thing. But I'm telling you that a massive loss is critical to your education. I'm telling you that it will happen. It may happen 2 or 3 times before you finally get it. But if you have perseverance and if you look at the reasons behind the massive loss, you'll be a successful trader. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.